the development, market development featuring as eminently as we did in an emerging market or what you call frontier markets. The other area has been the self-regulatory organizations. They are either underdeveloped or they have not thrived as much as in the developed countries context. The other area is, of course, that the range of products and services is somewhat narrow compared to markets where the capital markets are developed. And I think you did see that, especially with the global crisis. There is obviously limited trading activity. Again, for example, in Kenya, it's very extensive, but I would still say that even when you compare us with regards to the developed world, we still find that the trading is only a fraction of what happens in the exchanges in the West. Financial literacy is still very low as compared to the West, where you can say about 60% of the population is financially literate and participate in the capital markets. What I would really like to say is that in the developed or sophisticated markets, the regulator really functions in terms of just really focusing on enforcement, focusing on regulating the market, and very limited activities are done with regards to oversight. What they do is they grant a self-regulatory organization mandate to first-line regulators, such as the stock exchanges or the central depositories. And these are the ones whom the regulator exercises their core mandate of regulating. Of course, we have also noted that there has to be adequate capacity in corporate governance as well as enforcement capacity. I think for enforcement capacity, I'd like to say that there has to be one of the core mandates of a capital markets regulator is really to focus on, you have to have the will to take enforcement action, and that's really what defines a capital markets regulator or a regulator. These are really the countries that we have seen, where, for example, UK, USA, as well as South Africa, we see the mandate just focusing on oversight regulation, through the various institutions, be they stock exchanges or otherwise. In India, Kenya, Nigeria, we have seen that the regulator is both performing the developmental aspect of developing the capital markets as well as also performing the regulatory role. In terms of performing both these functions, I must say there are challenges that come with that, because you're balancing competing interests, and the regulator has to be careful, because on one hand you don't want to stifle innovation, you want to ensure that there is an innovative market environment. What we would like to say is that sometimes also when you look at some of the countries, because of, again, the aspect of the regulator being seen that they might be a bit heavy-handed, sometimes the market also waits until the regulator provides that facilitative environment. But what we would like is to have the right balance, where the market is free to present proposals that are viable, and then engage with the regulator on the risk aspects of the same. I think that will really be the regulator's role, to define what are the risks, systemic risks or otherwise, that are defined by a particular product or a particular service that the market is willing, is coming in with regards to a certain innovation. And that's the approach we have been taking. As I said, in terms of our market, we have one stock exchange which has been in operation for over 40 years. And the regulator came into place in 1989, and we find that the more sophisticated a market is, of course, the riskier it is. We have seen that with the global crisis that occurred in 2008, but a clear regulatory framework is essential, as it provides transparency. It also provides a mechanism for investors to have confidence that what has been set out in the regulatory framework will actually take place. So on one hand, it also provides confidence as well as protection to the investors. Our regulators, both in the developing and emerging markets, have to ensure that there is a well-developed policy, regulatory, and institutional environment. So it's not just about ensuring the laws are there, but you have to ensure that the institution also has that capacity to actually facilitate those laws to be actualized, as well as the right policies to engage, because the policies will not just come from the regulator. It's part of really engaging the various arms of government to ensure that the right policy mechanisms are in place. As I've said, the objective is to strive for a stable and accommodative regulatory framework. Again, stable, it's good to talk about the economy or the capital markets growing at a very fast rate, but I think our objective is to ensure that the market is stable, yet accommodative. And this is in line with all the dynamism that we see in our market. For example, in the political, in the social aspects, as well as in the economic arenas and technology. So you have to balance all those changes with regards to the stability of the market. And the mission is really to focus on a sustained and competitive capital markets where investors are able to raise capital and provide obviously a right framework for investment opportunities, while also fulfilling our core mandate, which is really investor protection. Some of the key innovations that have been facilitated in the Kenyan capital markets have been, of course, the dematerialization of the treasury bonds, as well as the establishment of the central depository, which is really an automated system for both the dematerialized securities as well as to facilitate trading and settlement in an automated manner. And this happened in 2004. Subsequently, in 2006, there was introduction of automated trading in our markets, which also led the way in 2007 to brokers being able to trade from their offices through the wide area network, which is one. Then we also have, in November 2009, the automation of the trading of the bonds, both the corporate as well as the government bonds. And we have also facilitated approval of infrastructure bonds, which with the first one happening in January 2009, which again is in line with government's deliberate policy to promote infrastructure financing. The other area which recently you saw last year, from the last quarter, we have two investment banks who have started online trading of securities, and that is something we have facilitated, as well as the approval of the first unit trusts. One of them is to cater for the Kenyans in the diaspora, and the other one is really the first ever ethical fund, which is really based on Islamic finance, and we believe, again, these are good innovations for our market. I will not talk too much about the product, but we really have an equity market and a debt market. So far, there are developments in the derivative markets that we are working on, and we believe this will be out sometime next year. Again, I would not want to not talk about Vision 2030. All that we are doing is really to support the government's vision of Vision 2030, which is really to ensure that our economy strives to middle income status by the year 2030. So based on that, there are certain targets that have been set out, which we believe for us in the capital market, they are critical, which is that the GDP growth is at 10%, as well as the gross national savings. For us is really to see how can we increase the mobilization of savings by ensuring that there are adequate products as well as adequate services that can allow the issuers to be able to access the savings that are available. And this has again been increased from 16 to 27%, as well as increasing the gross national investments from 23 to 32%. Again, this is mainly through infrastructure financing. We believe a lot of those flagship projects under Vision 2030 will be financed through the capital markets. So our potential for, I'd like to just say that the capital markets has been enormous. So we have had, if we were to just translate some of the big products that have been issued, for example, the Kenyan and Safaricom bond shares, we can say that the subscription has been up to 226 billion Kenyan shillings, which is really showing us the huge potential of our capital markets. These are the trends we have, and I'd like to just focus on the opportunities in the capital markets. They are abundant. Right now in the treasury bonds, in infrastructure bonds, as well as the resident saving bonds, as well as the corporate bonds that are available. Right now they are all listed, and we expect a few more issuers will come in and issue corporate bonds. We also have a huge market for secondary bonds. It's pretty active in our market. And again, the yield curve has been expressed because of the long tenure of our bonds, which is up to 25 years. So that has really allowed us to have a good yield curve. There are some IPOs which we're expecting from this year, as well as secondary market for equity is very active, and commercial paper and the collective investment schemes, which is where the unit trust funds, which we have in place, are actually trading. We have certain measures that we are saying these are the basket of measures. We can't say that one measure will promote innovation, one measure will promote a stable market. They have to be considered as a basket of measures or a basket of reforms so that the capital markets and the financial markets can be successful. And some of these are really the digitalization of our stock exchange to be in line with best practice, as we have seen in South Africa, Mauritius, and Nigeria recently said that they would also be doing the same. And we're in the process of entirely overhauling our regulatory framework to be in line with something called disclosure-based regulations, to also cater for certain products like real estate investment trusts. We have also actually drafted book building regulations to cater for different ways of pricing securities on the first day of trading. We also have introduced risk-based supervision, which is a proactive way of determining what are the risks in the market so that we ensure that the market is stable. We also have been focusing on modernizing our market infrastructure and facilitating that through the Nairobi Stock Exchange. For example, the broker back office, which will now mean that the back-end offices of our stockbrokers will also be automated, which will mean obviously faster transactions and more efficient transactions. We, at the authority, we will be facilitating online licensing application as well as online submission of documentation, again to ensure that the information is on our fingertips. These are really the measures we have taken.